The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's check out what's going on. We got the S&P up 10 points on the day right now. Coming a little bit off its highs at the moment, but had a nice big run up there. We got the Russell up 4.5 with the Nasdaq up 11.75 with the Dow up 94. And looking on over, we got oil is down $1.40. Natural gas, pretty flat on the day at the moment. Corn up 14 points, that's 2%. Soybeans up $1.75, basically flat right now. Euro dollar down 42 pips. Aussie dollar down 89. Pound dollar down 101. So I've had some good market-moving events and news. Had a great news trade last night with the pound dollar. And dollar CAD up 97 pips on the day. Dollar franc up 109 pips. Both of those also with news trades. And looking over at Euro Yen, up 99 pips. Pound Yen up 66. We got the U.S. Yen up $1.08. Gold's currently down $7. That's about 0.5% move. We got silver is very quiet and flat on the day. We got copper right now. It is up 1%. And let's see here. Yes. All right, now I want to look at what's going on today because we had some interesting stuff. Bernanke threw a few things in the loop, and he said basically we're not backing off, but I would not rule out that we might be backing off. Okay, so when that news came out, market was not happy. They saw the report, and so when Bernanke does his testimony, and that report came out. And instantly the markets read into it, and they're like, okay, sweet. They're not backing off of anything. And, they were all over it and everything else. And so the market started flying up. But then they started asking him questions. So Congress started asking him questions. And when that happened, the market's like, wait a minute, this is not as good as this is not what we thought you were saying. And so it basically gave it back. And so right now, they're sort of waiting now. What's the next big thing? Here at 2 o'clock, okay, we're going to have some more news be released. So let's go ahead and pull up some charts and look at this. Scroll through these indices real quick. But we're going to have the FOMC minutes. So now people are, based on that's almost that mixed, press release plus commentary by Bernanke, they're going to be paying a lot of attention to what comes out of the man's mouth. And so not just, but I mean, everybody, like, what was the dissent? How many voters were there? What were they saying? And, he doesn't, want early tightening, wants sustained improvement, but he's not totally ruling out the possibility. And he's not even, discussing. So basically, they came into the question about, if they'd come in and, would they, get involved and a bunch of these pieces, and he's not even discussing. It's really interesting, the way he's kicking things back. And they asked, would he stay on? A question was asked, Bernanke, will you stay on if you were asked to by the president when it comes up for renewal here? And I want to say January, February. And he said he won't even discuss it. I mean, it's just I'm not answering that question. So that obviously wasn't the most, comfortable statement that he's made in a while. And but anyway, so we got the S&P. Let's look at this right here. So it was really flat all night, no surprise, waiting on all this news to come out. We got the S&P trucking along, starting to move a little bit. We do get a little series of news events that causes the market to move a little bit. Ultimately, though, waiting on Bernanke's press release. That comes out, boom, market reads it. You get all the algos going through and scanning the document for keywords and phrases, and things starts flying up. And from where it's at right before that release, basically moves up a full deviation, just right on it. I mean, just right up there. Pulls on back a half deviation after he starts answering questions. And pulls back all the way to the half deviation level, which is a 1 deviation retracement. And now it's just bouncing between the 0.5 and the 1 deviation. Everybody's waiting to see what these FOMC minutes are going to say next. But that really has been the market activity. I mean, you had a great long trade right there, and then it's just been chop ever since. Not a big surprise that we had the big move. Not a surprise that he said something that dropped it back. And it was statements like, I'm not going to talk about coming back on. And is it possible that over the next few meetings we could possibly look at, winding things down? That is possible. He's not ruling that out. So the market did not like to hear that statement at all. And we go look at the NASDAQ. We had basically the same thing, settlement all night. Report came out, shot up a deviation, pulled all the way back, just oscillating right now. If we wrap on into the Dow, same movement, almost exactly the same as the S&P, which is pretty normal. But shot up a full deviation, actually passed the 1.5 deviation mark, came on back down basically to a half deviation, shot back up. Now this part is a little bit different. It actually shot back up a deviation and now pulled back half a deviation. So, the chart pattern looks about the same, but it had a little more resilience and strength in that. And we can go in and look at the Russell. So on the Russell, we got to move not quite to a full deviation. Full up to 0.5, full up to 0.7. Gave you a chance. I'm always talking about trailing those stops. So on that pullback right there, you get on in, then trailing those stops. Where would you trail them? Well, you trail one right there. Then this one closes above, so you trail the next one right there. And it's pulled back ever since then at this point. So now you got the Russell literally sitting right at 1,000. So nice round number. And it popped through it pretty solid. So with a high volume. And something to really, probably make note of is check this out right here, okay? We got this high volume right here and coming in. And what's the low of that bar? What's the high of that bar? Now, we're going to have a couple things we want to pay attention to. But this thing flew up. It came back down. And look right where it came back down to, that same high volume bar, okay? And normally being an up volume bar, you're looking at this as a magnet price. But, it came right back down pretty much to the low of that bar. So right there where that volume was at, where it busted through, that's where it's currently sitting at on the day. And, all right, we got looks like we got a caller. We got Rick. Rick, you there? This is Darrell.
Yeah. Hey, how you doing today?
Hey, man, I'm doing great. How you doing?
Really good. I like your insight to the market.
Thank you. Appreciate that.
I'm looking at, my call is basically looking at some things, and I don't know if you've done that, like the S&P, and stuff like that. IWM, like you just covered, is good. Yeah. But I'm looking at some of the most powerful things leading the way. And I'm not saying copper's the most powerful, because it isn't. But it looks to me like copper might go to about 350, 352 or something like that. And I just mentioned that one to you. And as far as the gold, or as far as other stocks go, I haven't looked at any of the home builders, but they've obviously been dynamite. But Goldman Sachs is another one. So basically, it's a twofold thing as to where you think copper's going. I think it has a chance to go to 350 yet.
Well, basically, what's happening? Obviously, the biggest thing that's going to influence copper is going to be the housing, market, the development.
Yeah.
And so there's been obviously just a lot of reports come in that have been positive for the housing market. Even this morning we had stuff come in. Right. And let me pull this up real quick, get rid of a couple things so that's a little easier to see. Yeah. And we'll analyze it. Let's see. Let's get rid of the. All right, that'll make it a lot easier to check out. And then I always pull up the continuous contract, so that way I'm doing analysis on a long-term time frame, because I want to be able to see, the markets basically mesh together. So yeah, 350. There's not so much just standing at 350. I guess you got this resistance support level line. Is this sort of what you're looking at right here? You're looking at, if we go to 350 and we pull that across.
I don't know what the volume's like today. I use a service called Bar Chart.
Right,
and their volumes are fairly accurate, actually. And so I don't know if it's an ABC up, which should take it to 360. But I was just curious. I mentioned copper as possibly going there, and I look at some of these financials have been pretty strong, like a Goldman Sachs. Especially with earnings season being over now, a lot of these stocks, they're kind of like geese, right? They just follow each other. They all go up one day, they all go down the next. You know what I mean?
Yeah.
And I was just curious if you had anything other than the S&P. I just started listening to you now. I just walked in partway in your show, but you got any price targets on you have anything that you're saying, okay, this,
Well, my next target on copper would actually be 345. I'd be looking at just a 50% retracement on copper right now.
Okay.
From high to low. So that's 50%, that's going to be your GAN traders, your golden ratio traders, your Fibonacci traders.
Mm-hmm.
Okay, so what that means is there's going to be a lot of orders sitting there. That's why it works.
Right.
Is because the more the market exists for the sole purpose of filling orders.
Right.
So it's going to go to where order flow. If there's no orders, that's when you're going to see it just turn and go the opposite direction. Okay. So since that's where there's going to be a lot of orders right at that 50%, like I said, fib level, GAN, golden ratio level, all those will come back to this. So that'd be the first target I'd have right there on, copper. So, you could pull that up. What's the ETF? I know it's HG something, the ETF for copper.
HGN is in Norman.
If I get that one.
1-3, or however. Sometimes you just use 3. But
okay. I thought you were talking about an ETF. I was like, I don't know what the copper ETF.
I don't know what copper ETF there is, actually.
Yeah, so I thought you were targeting that. Yeah, I had the copper one up. But, so just depending upon what you like to use. I use NinjaTrader because you can get, you can get data free, you can get futures data live, everything.
Okay.
But if you're not intraday trading, it doesn't matter as much.
Yeah.
But, basically 345 would be my first target on copper right now on the way back up.
Mm-hmm.
It just broke this the way that I trade, basically right here. I'd be tightening my stop at this, literally right now.
Mm-hmm.
Because we just broke the high, so on this reversal pattern that just took place.
Mm-hmm.
So before I would be getting in on the trade, I would need to see another, just a pullback, after today, a lower high.
Right.
Okay? And then I'd want to see it break that previous day's high before I got in. So, because basically I want to see a momentum going in my direction, and I don't want to just buy and then all of a sudden the thing turn around on me. I want to see it actually moving. So, right now I would have had my stop moved up, and so if it actually, at the end of the day, I'll have it moved up. So, which we're pretty much at the end of the day on copper, as far as the pits are concerned. And so right there, so as soon as we get a lower high, let's say tomorrow it pulls back a little bit, then I'll buy on the next bar's breakout. And I'll have my stop just below the low from that pullback, so the lowest point of the pullback. So on this trade right here, I would have had my stop at this point right there. So just moved it up. That walks in a profit, but it also gives it room to run. But if you want to stay on, we talked about a couple other markets that you're looking for price targets on.
Yeah, you bet.
All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so got Rick on the line. We're just going through a few different markets and talking about, targets and where they're going and what's going on. You still there, Rick?
I'm looking at a Goldman Sachs. I just picked one financial. I don't want to talk about JPM right now because there's just too much kerfuffling going on. You know what I mean?
Right.
But I put a weekly on, so then you really can see your ABC up type of thing. And
what symbol are you looking at right now?
Oh, sorry, Goldman Sachs. GS.
Yep.
I put it on a weekly because it's a little cleaner on a weekly, like where your A and B is.
Yeah.
And I use a 150.99. Well, the A point, you could go to the low there at 137.29, and then up to the 2 weeks later to the top at 150.99.
Yeah, so this would be my buy point right here, and we broke. Did we break the high of that last breakout? Let's see, high 159, high 158. So today we just broke the high.
Yeah,
so at the close of the day,
we don't have the volume. We don't have the volume for a large ABC.
Oh, I know. Yeah.
And
so that's where I'd be throwing my stop right there. Yeah.
So what I'm saying is, but on a daily, we're having it today, which means today's high is probably got to get tested. So that's my thoughts on GS, and I mean, it might flutter up a little higher yet. Who knows? But we're getting on that one. Now, Tom likes to talk about the U.S. dollar, and this will be my last subject that I'd like to talk to you about. I appreciate you letting me do this. Is if we put the euro on a 1-year daily, it looks to me like it's forming quite a head and shoulder top, which would cater to where Tom's target is on the dollar, and I guess we could put the dollar on instead of the euro. But I just thought I'd mention on the show the euro, and that's E6 Amazon Melvin 1.3.
Yeah. Mm-hmm.
And that targets the into the lows of. I've only got on a 1-year chart, so I guess it has to put a longer term chart on. But and that definitely would take the market down. And I think the German elections are in September, and I don't know how happy the population of Germany is with the rest of Europe, but I don't know if that's what's going to do it, if that indeed does happen, But anyway, I just thought I'd mention that to you.
Yeah, what I'd be looking at right now is definitely being short on the euro. I'd be waiting for, right now, I'm waiting for another break below. So we're very close to a break below over here on the daily bars. Mm-hmm. So I'd be looking for, now on spot, I could also pull up the futures. The
last swing low, which we haven't hit today, is 127.50.
Yeah, see, when that happens, that's when I tighten my stops, that second. So,
right.
So I don't have an entry yet. I'd actually have to have one. I wouldn't have an entry today. I'd actually have to wait till tomorrow to have an entry.
Okay.
So the way that I trade. But I'd be looking for it to break basically the low of today for me to be able to get in the trade. Because we made a new high today on the pullback. Mm-hmm. I don't know if you can see my chart over there on Tiger TV. Like right here, basically this is my pivot level. Okay.
Yeah.
So my trades on these E bars, like you see like the E right there, so entry. So I need it to break, and that can be the bar after the P bar there. So after the pivot, I need to break the low, and then I'll trail my stops accordingly all the way down. And I make the momentum go in my favor. But I mean, we definitely had that pullback and that breakdown. If we go and look at the, let's see, what is it?
It may go and test
the futures.
It may go down to 128, 127.50, and then it may pop up and test that 130 high of today on the futures. And the spot would be awful close to that, probably maybe, 50 cents lower? I don't really know for sure how much the spot is lower than the futures. But anyway, I mentioned that head and shoulder pattern on the euro, and they don't always work. But if you were going to draw head and shoulders, it's a pretty class act.
Yeah, I mean, you got the higher, the lower shoulder. I mean, I guess you're looking at this point right here. Now, you have the big head and shoulders right here. You're talking about the big one, like that's been forming since February?
Oh, yeah, on the 1-year chart. Yeah.
Okay,
exactly.
So you're back at looking at like February. Okay, yeah. So, yeah, I mean, if it breaks down, definitely could keep going. I mean, I'm already short. So, as far as my, position stance on the euro right now. Mm-hmm. But we can even go back and look at weekly and see. You get the exact same thing.
Yeah,
so you even have head and shoulders on the weekly. You just haven't been able to break down this low down to 1.8 here.
Yeah.
1.88. So, yeah. But you're heading in the right direction. I don't wait for it to get there, man. Wherever everybody's going to do the trade, that's where I'm looking to start taking profits.
Yeah. Thanks a lot, man.
You bet.
Bye-bye.
Thanks for calling in. Bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, checking out where the market's at right now. We got the NASDAQ pulling on back right now. It went on the way back and filled in the gap, I guess you could say. Not quite a gap trade, but all the way back down to settlement. We got the S&P. It's pushing. It's only about a couple points away right now. Looking on over at the Russell. It's moving on down past the settlement, broke on through. Did not do it with massive volume, but nevertheless, it is on down there. And we'll check out the Dow. So over here on the Dow, it's still at half a deviation. It has not had the weakness that the other indices have already displayed. Now, let's go in and let's look at the pound dollar and talk about some of the news that came out last night, and just sort of walk you through a few of these pieces. Right here on the pound, let me back up for a second. On the pound, we had retail sales, the meeting minutes, the public sector net borrowing come out, looking at about an 80 pip or so average move whenever those announcements come out, and we got it. So it moved, right between 70 and 80 pips. And market came out 51.29, hit a low right here at 50.73. And but you put the numbers together, you're basically going to get right around 70 pips or so of movement, which is the expectation off of that news announcement. If it misses, the target by a certain deviation. So a deviation, we have the deviation levels on price. We also have deviation levels on news. And so that deviation basically fell right in line. And you saw it fall down perfectly. I mean, just look at that one deviation. I mean, right there. Okay? Runs back up to settlement this morning. So on the Bernanke news shuffle there, existing home sales a little worse than expected, but still, 4.97 million existing home sales came out. That's higher than last time, 4.92. It's not a horrible number. I mean, it's not just right at expectations, but it's not a horrible number. So number ran out. Bernanke talked. Then people didn't like what he had to say after he really started talking. Fell back down, gave it all the way back up right there. See how it just paused at the one deviation, then fell right down to 1.5 deviations. Paused from there, and basically it's cooked and done for the day. So we got our move down. We trailed our stops all the way, and so you can see right here, trailing that stop at that 1.5 deviation. Bar closed below it. Pop back up, hit the stop, done, and out. Now, that wraps up the pound dollar. We also had some decent movement over here. Let's check out the dollar CAD. And so on the dollar CAD, they had some new, their core retail sales and retail sales came out. They came in, basically worse than expected. Not right on target. Expectation was 0.2, came in at negative 0.2. Anyway, so when the number got released, right there at 8:30. So let me back up here. So right here, the number got released. We got a little pop on it. Didn't move just a massive amount. But then it pulled way back on the news from Bernanke. And so I was actually playing the 3 o'clock expirations today. Pulled on back, all the way back down to settlement. Retraced a full deviation. Of course, again, Bernanke talks. Flew on back up to 1 deviation. Chilled out there for about an hour and a half. And then went ahead and ran up to the 2nd deviation. And so only thing I was mad, made money on the trade. Only thing I'm mad about is I didn't just hold on to it longer. But, it did hang out there for like a good hour and a half. So obviously, it wasn't a horrible call. But anyways, ran on back up and gave you a chance to trail your stops along the way. And looking at the dollar franc. So on the dollar franc over here, we also had some decent moves. Switzerland last night, their chairman, Jordan, he came out, he gave his little speech. He was talking at a press club in Frankfurt. But anyway, so you got settlement pretty much the entire time. Last night, moved a little bit on the news, moved it to 2.7, came all the way back down and ran up to a 1.5 deviation. And we're just sitting at the 1.5 deviation level right now on the day. And like I said, we got crude oil inventories. Let's check that out. So inventories came out today. So right there, here is the oil contract. And oil inventories came in at negative 0.3 million, on expectation negative 0.4 million. Not a massive difference in and of itself. So they just edged down a little bit from the previous week. Last week they're negative 0.3, negative 0.6. So actually it went up from last week, but it was still lower than expectations. And so we see that move that got launched at 10:30 is when the oil inventory report came out. And it just shot. Literally shot down. Almost, actually over $1. Right there move. So after already moving down $1, pulling back up, moving back down. Look at that. That's a nice movement that you could really hop in and take advantage of, especially with that simple strategy that I'm always talking about. Just go in and, sell, like on the bar that breaks below, okay? And then go in and then look to trail your stop. Each time it closes, boom, right there. You're in, you're out. Okay, you got another trade to go in again, right there. And then trail your stop, closes down, closes underneath, and you're out. So 2 nice moves that you can take advantage of right there using the deviation method to help you as far as your profit targets for trailing your stops. And it's just been in a lot of chop. You're talking 40, 50 cents chop. Great scalping territory. And you can even use Nadex to scalp, where you go in and you buy some spreads and then you scalp against them. You're selling against them or vice versa. So it's pretty cool. There's a lot of ways to combine products together to help you out with that. Got a caller in right now. Got Danny from Atlanta asking about gold and silver. Hey, you there, Danny?
Hi, Darrell.
Hey, man.
Gold's taking out the low we made earlier today. Do you have a longer-term opinion on where it's going? Is this a good entry point?
Down. But let's see here. Let me pull it up for you. And I got gold on the chart now. But let's go in, and you want a longer term, so we back out, because I'm always trading intraday usually. Now, you trading futures, you trading GLD, you trading gold stocks, what are you trading?
Futures on the gold stocks.
Okay, so both. All right.
The futures I want to look at.
So you're basically using the futures to trade the gold stocks? Basically, it's just a judge on where gold's going?
I trade both.
Okay, oh, you do both. All right, cool. All right, I just want to back this thing out so we can see a little bit more, and I want to get some historical data in here. There we go. All right, well, right now, I mean, we did take out this most recent low that we had yesterday. Okay, like right here.
Yes.
We had a high volume bar. So let me zoom in a little bit more. It's hard to see. All right, right here. Check out this high volume bar that we had right there. See that one?
Yes.
Talking about it was on the 16th.
Yes.
And that became basically the magnet price. We hit that price literally yesterday. It's right there. We hit that price. See that? So we came down and we hit the low of it, which was sitting at 1355.3. As soon as it hit that, I mean, the thing basically just, rocketed right back up. So from right here, got this. It came down, touched it, nicked it, and popped back up, which is to be expected. There's going to be a lot of stop-loss orders down here, right? There's going to be breakout traders down here. So there's going to be a lot of orders in both sides. It's going to cause oscillation right when it hits it. It didn't break it with any volume yet, though. So, I mean, comparatively, if we look at the volume level right here, we got 271,000 contracts on gold, 272,000 contracts, it looks like. And then, yesterday when we broke that level, we broke it with 122. It's like half the volume. So no big volume breakout yet. So until I see a volume breakout below that, I'm not real convinced it's just going to, keep dropping. But, I mean, as you know, the way that I trade gold right here, what I'd be doing is I'd be having my short would be up here. So you get the pullback, you get the drop, then you have your stop. So we would have got in right around 1460. We have our stop right here above the high, right around 1483, 84. As soon as it broke this level and that day closed, trailing my stop. So right now I'd have my stop on my short. Position would actually be above 1397.9, so right around 1398. And to go short again, then I'd be waiting on it to break a previous day's low. So like it'll need to break today's low tomorrow before I would get back in the trade to add in more. I'm not out yet, so I'm still, I got the position on right here with my trailing stop right here. So it hadn't got kicked out yet. If it does kick it out, or if it doesn't kick it out, either way, to add into a new position or to start again after getting kicked out, it's got to break a previous day's low. And I'm going to be very cautious looking for this volume breakout, because that's a massive volume level down. I mean, you can see where it's gapped and everything too. That was just a huge move day. But as far as like where are we going from here, and I mean we're pretty low, and we're back to 2011, really 2010 levels right here. So now the question is, the next major consolidation point we got was around 1200. So 1200 to 1250. So that's probably where that's where the order's going to be stacked up again. So if we can break through this level with volume, then I'd say we have a solid 100 points that you could enjoy the ride as it continues to move down. That would be my target right now for the next move down. Would be 12, right around. I'd put it at the high point to be conservative. So right around 1260.
Okay.
And as soon as it hit that, I'd be looking to tighten my stops. So just because I'm going to expect it to oscillate. Just like right here, we came back and we see how we hit this area right here where all this oscillation was happening?
Yes.
It's a ton of order flow right here. So there's a lot of memories right here, okay, of traders putting on trades. And so as it comes back down, as soon as it hit into this level, this zone, you could say, so right here. Then look at it. We came down, boom, we stopped. We bounced up above it. And like we did it on a massive amount of volume. So right there. And so we did that and it pulled back down. But look, I mean, the last time we had this kind of volume, I mean, that was back up here at the high as well. So, I mean, it could easily be a big turning point, just depending upon what happens. So I'm just going to be very cautious. But I'm always looking for these areas where you see this major consolidation to target. So on the way down, you're targeting this. Well, where's the next one? It's going to be right down here. So the same range. And I mean, you're not talking about having to, really do massive analysis here. I mean, you just look for up and down, up and down. And there's a lot of orders right there. So that's where I'm getting that 1250 level from, is going, okay, this is right where it did the same thing that it did right here last time. So if we break down, that's what we should be looking for. So about that, that's a solid 120 points. That's a good, $10,000 to $12,000 move on a contract.
Yeah.
But does that help? Is that what you're looking for?
Well, I was wondering if it sounds to me like you think we're going lower and this is not going to hold. That's my basic question. This area is not going to hold where we're at.
Right now, I think right now it's at a point of indecision. I would go short again if it broke a previous day's low. So I mean, the thing we've exhausted all these orders up here. Okay, the market tried to run up, like right here. If we zoom in on this, the market, it did get to this point already. It did it with massive volume on those that boom and that gap. It came down and it stopped everybody. Everybody got punched in the face. Okay, that was long, and that's why it flew so fast. People could not get out fast enough, and so we have this massive volume and all of these long traders getting nailed, and it ran back up right to that same, that basically filled that gap, within a couple points, but basically filled the gap right there. And there really just wasn't the buying strength above it to keep it going. So, I don't see a lot of evidence that says it's going to run back up at this point. And I'm very, the way I trade is I try to be it sounds funny, but as little opinion as possible. And instead of trading what I think, I just try to trade where I see the chart is. And because my opinion's got me in a lot of trouble over the years, I've learned to not listen to it too much. But my opinion being like my gut feeling, what I want to happen. My reading from all the news, and watching Fox News and CNN Money and Bloomberg and all those things. Like that opinion is what I'm talking about.
Right.
I want my opinion needs to, the one that I actually make my decisions on needs to come from what's happening just on the chart. And I mean, this could easily be, a double bottom, it could bounce off of it. I mean, it's always, double bottom is great once you know it's there, but until you know it's there, it's usually too late. And so, right here, what I'm looking for, like I said, if it continues to break down, I definitely have my stop. I mean, I'm not going to just stay short in this position. Okay? So, if it goes up and it breaks 1397.9, I'm out. All right? If I'm short, I'm out. And I would be looking right now. I haven't seen anything to tell me to go long at this point. I would be looking to still go short again to add back in on a break below the low. And I mean, what's going to happen is if it does it, then we're going to see another $250,000 contract day, and it's going to break below this 1350 with volume. If it does that, it's dropping down to 1250. So
okay,
we'll see another big move.
Yeah, that helps.
All right, cool. All right, well, so good luck in the markets. What gold stocks are you looking at? Let's look at a couple of those real quick.
GOLD and RGLD.
Okay. Well, hold on. We'll come back. We'll look and see if we can see any more clear information on that, where they're going. All right?
Okay, thanks.
You bet. Be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Just checking out the RGLD stock right here on gold. And you still there?
Yeah, I'm still here.
Awesome, great. So I just pulled up RGLD, and it looks like it's sort of obviously going to be in a very similar pattern to gold. And right now, I mean, it's really pausing and hesitating. It looks very similar to how it looks right here. See this? It's the same layout, the same oscillation, everything happening. And so it came down, sort of popped, and then pulled back, and then bam. And I mean, when it went fast with a lot of volume. So if it breaks down, it's gonna do the same thing. We're probably gonna see about I don't know, was that a couple million shares there? But on the way down, and I'd be targeting probably the 61% retracement level, 76%. I'm sorry, we're at the 61. So go to the 76% retracement level. And, I mean, it's looking at the current, I mean, it's lost half its value. So that's already painful enough for a lot of people. I mean, the thing was at $100, it's at $50 now, right?
Right.
So, I mean, just think about the psychological impact if you were the guys that bought in here at 50. And at a certain point, you start going, this thing's lost its luster. I mean, it's all the psychology that goes into that and everything else. But But the next level where you can see a whole lot of oscillation happening, it was a support level before, it became basically just a resistance fight zone right here, a big pivot level, is the 76% retracement. So if we are able to push that down with any kind of volume, then we're probably looking for a move right down there to about $41 right now. So that'd be my next target on RGLD.
Okay.
So are you long? Go ahead.
No, I'm not long yet.
Okay, good. All right. So I was
Did you
going
get
get some short ETFs or some puts,
Yeah. Did you get any damage from those those tornadoes a few weeks ago in Dallas?
There was apparently some somewhere. We didn't really have it. So, I mean, we had the alarms going off, and they're like, go in your bathrooms, all that stuff. But, I usually just stand outside and watch for them, because it's not like they just sneak up on you. You see them coming. And, I've grown up around them all my life. I'd be out in New Mexico, out in the desert, and we just watch them, come down and touch and go back up and everything else. But, so, no, really, there wasn't really that much damage at all. A lot of what's sort of funny, because I've literally seen news reports, and now this isn't funny for people in Oklahoma. My heart goes out to them. It just got hit really hard. But a lot of times, when there's no news, there was a tornado, but they don't really have much to report, but there was a tornado, they'll go around and they'll find, the one tree that fell over and the one fence that, got broken, and they'll film that and put that on the news. But fortunately, thank God right here, people here, there wasn't really a lot of damage right here in Dallas. So
yeah,
we've been good so far.
You guys really get some violent weather, tornadoes, freezing rain, and hot in the summer.
Yeah, the hot in the summer I could stand. You just, you make sure it's an automatic car start, so when you run to your car, it's cool. And the tornadoes, at least they're spotty. It's not like, hurricanes, they wipe out a city. And earthquakes, nobody's safe. So at least with tornadoes, usually it hits a few blocks and moves on. Tornadoes, so it sounds really freaky and scary, but I've been around them all my life, and I have no fear, of them. I've been where they've hit, and it's sort of, you just hear the wind moving, and you wouldn't want to be standing outside when the tornado's close, but go into a basement, go inside of a enclosed bathroom inside the house, and in most cases, unless the tornado hits your house, you'll be okay. So,
okay. Hey, thanks a lot, Darrell.
You bet, man. Thanks for calling in.
Okay.
Hey, man, you have a good day. All right, well, checking things out and wrapping things up. So appreciate y'all listening to the Diagnostic Trading Hour, and I will see you tomorrow. Y'all have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.